To our last panel. Thank you so much for staying. I don't want to be biased, but I think this is going to be one of the most interesting ones.
I agree. Also biased.
Yeah, not so biased. Okay. My name is Alex Nascimento, and aside from teaching here, I'm really excited to have my panelists here as guests. So we have Howard Marks from StartEngine, David Siemer from Wavemaker, Dustin Boyer from DNA and DARPA, Enzo Villani from Transform, and Tatiana Koffman, also from DNA. I'll let the panelists go around and introduce themselves. Howard, would you like to start?
Yeah, I've been an entrepreneur for 35 years, started Activision, Acclaim, and a bunch of game companies. Got into investing because I thought the laws were not, the way for entrepreneurs to raise capital was really, really difficult, and built StartEngine initially as an accelerator and invested in about 60 companies, and most of them couldn't raise capital, which was really a problem. So then I realized building StartEngine as a crowdfunding platform would work, and I came in through the Jobs Act, which you probably heard in the previous panel, and now my goal is to help the ICO world go into a 2.0 world, which is the next generation, so that the general public and really everybody can participate in the cyber world. And so we'll talk about this today.
Hi everyone, I'm David Siemer, original founder of Wavemaker Partners, in the process of launching a new fund called Wavemaker Genesis, which is about a $7,500 million crypto fund. Doing early stage investing for kind of most of 23 years, invested in about 300 companies to date. About 30 of those are kind of blockchain crypto companies, and we're kind of ramping up those efforts. And also do a lot in Southeast Asia through a couple of vehicles out there. So, yeah.
Hey everybody, my name is Dustin Boyer. I wear two hats. So the first is that I'm a commercialization manager on contract at DARPA, the Defense Advanced Research Projects Agency. I work with a small business program office where we have a portfolio of 160 DARPA-backed startups. It's everything from crazy robot swarms on air, land, and sea, artificial intelligence, advanced composites, lasers, space planes, you name it. I get to see it all. It's a really fun job. Basically, my inbox is a crazy science fiction novel. I'm going to be around afterwards. If anyone wants to talk about DARPA funding, especially if you're in biotech or robotics, please come chat with me. And then the other hat that I wear is that I'm a venture advisor at DNA Fund. It's a fund started by Brock Pierce, and we work with top-tier ICOs, and we guide them through the whole process. It's also a lot of fun.
All right, great, thanks. So my name's Enzo Villani. I am the actual managing director for Transform Group, which is the #1 PR company in actually blockchain. We actually represent about 30% of the actual cryptocurrency market cap. It was founded by actually Michael Turpin. I've known Michael for actually many years because I partnered with Michael's company MarketWire when I was at NASDAQ, and I was the actual MD there. In strategy, I created a business at NASDAQ that grew to about 300 million. I've done about $500 million in deals in the kind of IR space, proxy world, the kind of corporate comm world, mostly around things that deal with actually a large actual kind of pubco. So that's my first hat. My second hat is I also am the actual chairman of Millennium Blockchain, which is the symbol MBLC, which is a small cap company, about a $100 million market cap, and we're actually investing in top blockchain deals. I can't tell you which one because it's public. So I'm both dancing on the actual public space and actually private space, and there we actually focus on really investing in top actual blockchain deals, mostly coming through screeners that include actually DNA Fund, the actual Wavemaker guys, and actually Transform Group. So my kind of diligence process starts there, and yeah, and that's it. Thanks.
Hi guys, my name is Tatiana Koffman. I work with Dustin at DNA. For those of you who haven't heard of DNA, it is founded by Brock Pierce and Scott Walker. Brock Pierce is the guy who promised to give $1 billion away in Forbes the other day, if any of you saw that article. My background is law degree, business school, a couple years in investment banking, spent some time structuring swaps in currencies and interest rates and asset-backed securities. And then I moved to LA and kind of ended up in the music tech space. My first gig was working with Linkin Park, the rock band, and I helped start their early stage investment vehicle. And so we invested in consumer tech, Robinhood, Lyft, Blue Bottle. Then I went off and did the founder thing, started a company, partnered in a company, advised in another. And now I'm having kind of a return to my roots by joining DNA and combining the finance experience that I had from years ago with now the consumer tech experience, and really trying to find the best technologies that can take advantage of this new form of funding that we've created.
Excellent. Thanks, guys. So let's get to it. So my first question here is, many leaders in this space have been claiming that security tokens will gain popularity in this year versus utility tokens. Like, what are your thoughts? How do you see this evolving in 2018?
Here you go, Howard.
I have the honor to displease a lot of people in the crypto space because I've been talking about this idea of security tokens since last November when we started our summit in LA called the ICO 2.0 Summit. Here's how I see it. The utility token was invented because it was very flexible and easy to use, and you can trade it anywhere you want and sell it however you want. But in reality, if you look at the way the market has created, and it's become so successful, I mean, it was not successful, no one would care about it, no one would talk about it. Because of its success, and you've heard the numbers of $3–4 billion raised last year, the regulators got interested in it. And from a perspective of what a securities token is basically you're selling a financial product. You're buying and selling it, and that means it's subject to the regulations under the Security Exchange Commission, which was appointed by our government, which is the government. And so when you issue a securities token, you need to go into a whole new world of thinking. And unfortunately, for a lot of people, they don't like it in the cyberspace, but it is a reality. It's not something I invented. It's not something that I came up with the idea. I just said, look, the ICO is going to need to get out of the shadows into a regulated environment, and it turns out we got lucky. Here it is, we're in the United States. Our greatest luck was there was an act called the Jobs Act that came out in 2012, April 2012, that transformed the way you can raise money in this country that did not exist for the last 80 years. And it so happened, it's a modern piece of legislation that allows people to actually really sell to consumers. You heard it in the last panel. So what's happening now is a lot of ICOs, and you're seeing that, like T0 is a good example. And I think you're involved with them slightly. They are issuing a securities token. Now, you will hear more and more of this year because a lot of companies get phone calls from the SEC that says, hey, hold on a second, what are you doing? And so if they've issued tokens, utility tokens to consumers, they have to do a rescission offer, which means they have to give them all the money back. And if they want to re-raise with a securities token, they may be able to do that.
Interesting.
Yeah, so you know, the more people you talk to, the more opinions you'll hear on this. Some people feel the utility thing is the best thing that ever happened, it'll last forever. I'm of the mind is that, you know, in the next 6 months we might see a major shift towards security tokens. The reason utility tokens are so popular right now is because they're so liquid and so tradable. But there are at least 3 platforms that I know of that are being built for the purpose of doing the same thing for security tokens. So once liquidity is no longer an issue, now companies can actually weigh in and say, okay, do I need to be fudging a blockchain technology into my business where it doesn't really make sense to take advantage of this market? And the financial engineering that's happening is actually somewhat beautiful. The fact that we can now we can create, you know, securities and seed funding in a way that's totally liquid and totally tradable and secured by a piece of revenue or some sort of asset underneath. I mean, that in itself, I think, is very innovative, and it opens up companies to sources of funding from all over the world, and not just accredited investors.
Yeah, and there's a flip side to that also, that the security laws, like Reg A, is great, and that's not very used because it's very cumbersome, but and the premise of it is great. The problem is, as soon as you do something like that and you actually have like 5,000 US holders, you are a full public company with audit requirements and all kinds of other things that are really, really onerous. And if you're a company that raises a large security ICO, if you're T0 who's going to raise 250 million, they've already raised over 100. That's not a big problem. If you're the median, I think ICO was something like $3 million last quarter. If you raise $3 million and you're now actually really have to act like a public company, you have a lot of problems. And you probably have those consumers in, if you raise even just that much money, you probably have a few thousand people that are in, Canada, Europe, South America. You probably have to be regulatory and tax compliant in probably 20 countries at least, which is almost impossible to do if all you ever have is $3 million. So there needs to be some kind of differences there, where people need to figure out, is there a different kind of regulatory regime? But it won't happen soon.
Yeah.
So I just want to kind of lay it out for you here too. So in NASDAQ, I actually created a lot of compliance products that dealt with being a good public company. That's what I basically sold because because of the rule changes, and actually Sarbanes-Oxley was causing $1 million. It was costing a actual public company at that point $1 million to be public. Everything from the kind of compliance aspect to the filings and all that stuff. So we try to come up with products to help those actual pubcos kind of survive. This is the issue. In the kind of security token world, everybody keeps on calling it a kind of security token, but it has no basic equity rights. So I'm still a little bit confused on the security token versus the equity token. To me, the equity token makes sense, but a security token does not make sense. And who's going to register, and who's going to be the actual regulator? Is it the CFTC, because that's more of the Futures and actually kind of Commodities Act, or is it the actual SEC? So not even the government understands really where we're going. Secondly, I do see that there is a use for the kind of utility token. The problem is that everybody in this space would say, come to the investor conference, invest in my token, which you're not investing in a token. You're pre-buying a product before the product really exists. It's like going to get a pizza. You go in, you pay the money for the pizza, the guy makes the pizza, and actually gives you the pizza. You could take that ticket for the pizza and go to the guy next to you and say, buy my pizza ticket, my actual pizza ticket, and then that's like this exchange. The problem was, and in some ways it was the benefit, was that when the exchanges started trading these kind of utility tokens, that's when it looked, smelled, and felt like a security. And then when they raised a lot of money, it looked, felt, and like a basic kind of security. So I think that what you have to understand here is that there's probably a lot of different advice. You don't go raise a token just because you think that it's a good way to raise money. Either have the kind of utility or don't. And then secondly, there's a lot of legal opinions out there that to me are actually malpractice. I'm a former regulator guy. I don't believe completely in the way the regulation is being done because it's too hodgepodge. They need to set up a guideline. Somebody has to set up a sandbox and tell us what the actual guidelines are. Because if you have a basic kind of security token, but it has no actual shareholder rights, then why would you have to file a actual Form 10? Why would you have to file a actual S1? All of the rules are twisted. So until that kind of settles down, I think that you have a little bit more time to figure it out. And I just would say, you're going to hear a lot of different things. There's basically 3 types of tokens. There's the kind of utility token, there's the kind of securitized token, which has no shareholder rights, and then there's the actual equity token, which does have shareholder rights, which is basically a public company stock on the blockchain. So that's really all I want to get across here, because I think there's a lot of confusion.
So now things are about to get interesting because I want to very politely disagree with Enzo. Okay, so, and it's worth noting these are just my opinions. I'm not speaking for DARPA. I'm not speaking for DNA Fund. RTs are not endorsements. Okay, look, I don't think that the SEC should come out and really build a lot of regulatory framework around this right now. I don't think the CFTC should do this because this is still such a fresh industry. So when you look at technology development, right, we have a major problem. It's taking more money, more people that are more highly educated, longer to make major steps forward in technology. And then we look at the main way that we've been funding this, and all respect to Dave, but it turns out that venture capitalists want a very specific model. They want 100x returns in 3 to 5 years. That's not an accurate representation of the scope of business around the country. And we've, over the last 10 years since the economic decline that happened in 2008, we've seen a resurgence of jobs that are temporary. We haven't seen like a real resurgence of jobs that are true work, right? And I think that's because the main economic funding machine that we have weights a very small section of the business community. And so I really think that the thing to do if we want to think about job creation, if we want to think about technology development, is to actually wait, let this economy, let this ecosystem evolve, and then maybe government regulators can come in and say, hey, we really see some bad actors, maybe we'll go after them. But until then, I think I'm really in favor of the light touch.
Got it.
I'm glad you're in favor of it. A lot of people are. The government can make their own decisions.